Sorry about that. I about forgot to start it. But, like I was saying, with any business, when trading is a business, you need to kind of diversify your streams of income and learn to make some on the side, meaning you need to make passive income. And then on the other side, you need to, of course, make your active income. So what we'd be looking at there is, day trading, using our lower time frames, really paying a lot of attention and spending a lot of times on charts. That is going to be where we are looking at, our active income, because we're spending a lot of energy, we're putting a lot of time, and we're working, right? When you're day trading, you're working. Day trading isn't passive income. It's just simple as that. A lot of people will try to use that as like a marketing thing, but day trading is not passive income. It's just that simple. Now, whenever we are swing trading, I view that as passive income because I can look at a chart and tell very quickly whether or not I like it. And then I can very quickly find an entry. Options are really good for this because with options, you don't necessarily have to be extremely good at sniping entries. You just have to be extremely good at understanding time and price. And we've talked about how you use the monthly, weekly, and daily power of 3. And basically, just to break it down, and it's just how candles are formed. You have the open of a candle, which you're going to get accumulation. Now we're going to use a bullish example. Right, first, we're using bullish examples, guys. That's crazy. It's been bearish examples for a long time. But at the open of a candle, well, this could be the monthly, this could be the quarterly, this could be the yearly, this could be the daily, the 1 hour, whatever. It's just the opening of the candle, you're going to see an accumulation of orders because there's high volumes. Then if we're in a bullish candle, we look for a Judas swing, which is our bearish move, and that's our manipulation. Now, again, those of you who watched the Power of 3 video or the advanced, I think it was called Advanced Patterns, this can also be looked at as a power of 3, where you have the accumulation, manipulation, and distribution. But whenever we're looking at it from a time and price theory, we just want to look at it as we have open. If we break up the candle into 4 parts. So for instance, if we break up a weekly candle, the first week, a lot of times we'll see, if we break up the monthly candle, the first week we will see consolidation a lot of the time. Then we'll see a Judas swing. If we're going to be bullish, we'll oftentimes see a bearish move, and this creates the bottom of the wick. And then the last 2 weeks, you're going to see that push up and then the consolidation. And when you zoom this out, that's going to be your candle structure. So you don't have to necessarily understand how to get a sniper entry with options. And I know that a lot of you guys are in crypto section. I'm just going over this just to kind of give you guys insight on what I mean. But you just need to understand time and price. So for example, if you're expecting a target to be hit within a quarter, you're going to be knowing at least what weeks to look at in order to buy those options with a strike price around your target. But anyways, I just wanted to go over that because it was on my mind. Whenever we are talking about our swing trading strategies, we're going to use some examples that we took. Most of you guys were here for these, some maybe not. The DUIDX trade is the first one I want to go over. So when we're looking at DUIDX trade, it was extremely simple. I mean, this was 135% gain. It was like 3.5 to 1. We got in 7 days. And a lot of people will say, and this used to be the way I would think. I would say, well, I need to get more than that because I'm on a daily chart. So I'm going to go into the 4 hour and the 1 hour and the 5 minute, and I'm going to min-max everything, and I'm going to get, 10R, da-da-da-da. And that's fine. There's nothing wrong with that. But I know that I usually am day trading indices, so I am able to kind of look at crypto as my passive income, right? Like we were talking about at the beginning of the video, that we have a active and a passive income. So whatever you day trade, that's your active income. For me, that's indices. Maybe it's Forex. Maybe it is crypto for you guys. I think crypto is better to swing trade, but if we're looking at it in that sense, we don't necessarily want to put too much time into it. We're not going to be watching the 5-second chart on everything we trade. It's, unless you just have nothing else to do but trade, which I think everybody does, whether you want to think you do or not. But when I'm looking at this chart, I just look at it just like if this was a 1 minute chart. Like let's say I'm watching ES in the morning and this is a 1 or 5 minute chart. I would long this and I would target these highs. So if I'm looking at a daily chart, why would I think any differently? Greed. Because people want to get the highest risk reward possible, and they stumble and they just stay on demos and blowing challenges forever because they don't understand how to actually create money, right? Trading and creating money and being an analyst are all very different things. So we're looking at this chart, we're going to have a very clear area of liquidity, right? And this is on a daily chart. On the weekly chart, this alone would have made me enter this trade. This alone. failure to displace. So look at this. We have an area of liquidity, an area of liquidity. Right here, we didn't even tap anything. So if we're looking at impulse structure, kind of our most recent high and low, before this played out, let's look. We had a high, and we come down and make a low. Right, so and this is a good example of where people, because they'll say, oh, we got a candle closure. This is why I don't like, and this is subjective, displacement is subjective, it is. And it's discretionary, it's something you have to learn, and I'm sorry, there's no way for me to make it a 2 + 2 = 4 strategy, but I can try my best to teach you. And this is a good example of a lack of displacement. Yeah, we got a closure, but did we really have a push beyond this low? And if you're looking at it from a practical perspective, does it look like those stops were bought? To me, it does. Like if I look at this and I see, okay, there's relatively equal lows, price barely tapped into the liquidity pool. I mean, you're trying to tell me that somebody didn't buy these stops and we got an immediate expansion? That doesn't make sense. So if this high did not produce displacement past this low, then that high is your draw on liquidity. Now, in this example, it went straight to it. Sometimes it won't, but we're looking at it in the perspective that that is your draw on liquidity. So now that gives us a bullish bias. If you know what your draw on liquidity is and you know where your stop run is, you have a trade. It's that simple. You don't need anything else. All you need to do is determine if the risk to reward meets your criteria. Because again, what is a trade? Where we know where we're going to get in, we know where we want to have a stop loss, and we know where our target is. Do we need to know every single 15-minute order block all the way? No. The only reason we do that in intraday trading is because we can't, we're trading funded accounts. We're not going to hold through the close. We're not going to get gapped on by ES, or maybe our brokers don't even allow it. So then, of course, we have to navigate the markets differently. But when we're looking at our crypto accounts, why you don't have to do that? Especially, I think that the best way, the most kind of the most efficient way to really make a lot of money trading is have a passive account for crypto, have a passive account for options, and have a funded account or multiple funded accounts for day trading. That is the way. It's no question for me. You will never change my mind on that. You can disagree with that, but that's the way I think. So if I am trying to keep things passive, I want to put the least amount of work while still making the amount of money that's worth it for my risk. So again, for me, 2 to 1. I don't care if it's daily chart. I don't care if it's 1 minute. 2 to 1 is fine for me because I know I can maintain a pretty high win rate. And we've had a very high win rate, whether it's been options, whether it's been crypto all year. I mean, it's been pretty amazing this year, right? Not to say it won't. We'll probably have at some point. We'll probably have some times where it's not, right? It's probably just the name of the game. Also, looking at DYDX right now, it looks fucking phenomenal. Just because we're in this whole breaker right here and tapped in this fair value gap. This will be a trade setup I'll be watching in the future. I'm not going to try to ape into a bunch of trades right now because we have like 3% of the port risk right now, which isn't crazy. We've made way more than that this year, so it's not a big deal, but I don't want to just continuously keep aping into trades. Anyways, sorry, got off track. But if we have a trade entry, we have a stop, we have a draw on liquidity, that's all you need. Now, we didn't catch the very bottom tick here because I didn't see it in time, but the bottom tick was this balanced price range. So I have one fair value gap, another fair value gap after we take liquidity. This is another model. This is going to be the class we went over today, actually, but I want to take some more time. But this is a trade model I've been testing using on 1 minute. Basically, it's just a run on stops, and then it's trading without a market structure shift. You can use this on 1 minute, test this. You have to be pretty good at bias to do this correctly. But when I have a run on stops, if you see displacement into it, because remember, when we're looking on liquidity rates, we want to see displacement in and displacement out. So the only way to identify that I found without a shift is a balanced price range. But you can see it worked really well here. Would have given us a very good risk reward, but we didn't see that. So anyways, that would have been one entry. Now, if you don't get that, that's fine. Because again, whenever we identify our draw on liquidity, we just look at the price like we know what way the river's flowing. Where do we get in? So then you start tracing order flow. So we had a daily balanced price range as well. And then we had this big push down running out lower time frame liquidity. Massive push up. This is our displacement. This is our signal right here. That shift is telling us the market is drawing up. That's confirming that weekly bias. So if the weekly displacement theory wasn't enough, you had a shift down here and you have a shift right here. So you're just tracing the staircase. How am I going to get involved in this and how am I going to profit? And sometimes there won't be an opportunity. Sometimes it'll have moved too far and you won't have enough risk to reward. Or sometimes this market structure shift will be massive and the stop loss is too far. And you just have to understand and have a minimum risk to reward in order to avoid getting caught up in shitty trades. But in this example, we had a really clean idea. There was actually news that came out the day after this that they had a token unlock for DYDX, meaning that the seed investors who put their money in this project's infancy were going to be able to sell it. That would make people want to short, aka equal highs, and engineering buy side liquidity. But we were long because simply using a weekly and daily chart. It's easy as that, right? So after that, we're just going to target out liquidity based on, remember, that weekly or daily week level. This is one model. This is just the liquidity rate model, and it's just lack of displacement. It's that simple. Don't overthink it. People be like, what if in Asia there was a 15-minute order block and we had a bearish power of 3 and the weekly? It's just like, bro, just pay attention. I've given you everything you need to use, right? I get so many crazy questions, and not from you guys, but mainly on YouTube and DMs, where I'm like, holy fuck, these people are overthinking. It's like, I feel sorry for them because I'm like, dude, these dudes are like, they're really overthinking shit. Like, and they're smart. It's smart people. Smart people are more likely to overthink shit. So, you know, I'm an overthinker with a lot of things, but not trading, because, you know, I was at one time, but you can't be like that with this. You have to be decisive. So that's pretty simple. Liquidity rate, shift, follow the order flow. You could enter down here. You can enter just from the shift, because again, once we've, you know, this shift is our confirmation. That's telling us, okay, your idea has a probability to be right. This low not being closed under on a weekly, that's the trigger for our idea to even be born. And here's the target. That's all you need to trade. So let's say if you're just looking at the market, we got this shift. Maybe you didn't get a retrace on this order block, okay? Could you have longer right here? Because a lot of people will say, like, they're kind of immature at trading and they don't understand, again, just how to make money. That'd have been crazy if we cut it down there. But some people would literally, they'll say, okay, I'm going to wait for this order block to get hit. And if it never gets hit, they're just going to sit there. So stupid, right? You could take a trade here. You could take a trade here. It doesn't have to be a tap into a point of interest. Some people may disagree with me. Right, again, this right here is what pays me. My risk reward is what pays me. My win rate is what pays me. Sniping a 1-minute order block doesn't pay me any differently than committing or than executing a trade and committing to my idea, no matter if it's at the bottom tick or if it's along the way. It's just if my risk reward is good enough. It's that simple. Don't overthink it. Now, another setup that we took back in January, I think it was actually, yeah, it was January, was GRT. Now, this is the power of 3 setup. You guys saw, I mean, we took a ton of trades based on this back in January. It was super wild. This year has been pretty crazy with crypto. We took a lot of really good trades, and most of them were this model. Now, this one I want you to take into account ranges. So, for example, on the weekly on GRT, we had a bearish range, and price had kind of been consolidating, and we got a shift down here. Right? You also got a shift in the daily. And if we're looking to build bias, ranges are paramount because it tells us whether we are in expansion mode or whether we are in retracement. So if we're in a bearish swing, we have a bearish move, obviously, and we get a shift, what does that tell us? It tells us to look for highs. Of course, we can use low-hanging fruit. Like this, we use really low-hanging fruit. Really, you'd be looking for price to come to a premium. Now, that's a massive move, right? I'm not saying it won't. I mean, the price looks really good right now. GRT looks like it probably will end up making a new high as long as we can hold and not make displacement down on the weekly. Now, again, everything can change, but we're just looking at it in the sense of a probability. We're not looking at it like people will be like, oh, well, what if this? Oh, crypto's bad. It's just like, bro, then maybe you take a fucking loss. So fucking be it. Who cares, right? It's not, you can't be afraid to take losses like that. But anyways, you just look at the market in a sense that, okay, well, we have a bearish range, we have a shift, we're looking at it now, we're looking at a bullish scenario, right? So then instead of looking at fair value gaps, people be like, oh, dude, like, why didn't we bounce to this fair value gap? Why didn't we bounce to this order block? Why don't we bounce to this breaker block? Because you're fucking bullish. You're looking for buy side liquidity. You're not looking for areas to enter shorts if you're bullish. It's counterintuitive. So how can we fine tune this and get a significant entry off of it? By using the daily power of 3. So again, this is mainly going to be looking for accumulations above an area of liquidity. Now, this trade, we didn't have a very clear area of liquidity. We just use our range confluence. Now, if you had an area of liquidity, it would be even better, be more confluence. But again, if we're just using our, our range confluence, that's enough. And we get that shift back into the range. Now, this is where we executed. It was on the 13th, I think. Let's go back, and because I had to draw this back up for this class because I had to I clean up my charts. So let's see, where was it? Yeah, it was on the 13th, right? So we had the 13th. We're going to average in at those equal lows. Now, literally just to push back into this original range, that's enough for the trade. Now, again, if we have good risk to reward, there you go. We took profits a couple times along the way, right? So when we're looking at this chart, we don't necessarily have to, you know, just try to trade every single, I think this actually went farther. I can't remember. Where was the TP? TP was 20. Yeah, the TP was much farther. It was like 20.43 from this picture. Being this is too large. So yeah, super solid trade. We called that out back in March. I mean, it's just like, dude, it's not hard to make a lot of money off of the high time frames. People just have this notion in their head that they have to trade, you know, the 1 minute to make money, and it's just stupid. But anyways, we have that nice pushback into the range, right? Whenever we have a pushback into the range of displacement, that's my trigger to entry. A lot of people will just use this as a bias, and I used to wait for like a shift and enter it like normal down here. But in my experience, especially if I'm using a daily chart, I get a higher probability that I'm gonna be right if I wait for that. I get a lower risk to reward but higher probability, which you guys know that's my style. It's better for psychology. I've still yet to meet someone who's actually making a lot of money who's not using that strategy. I've met people that say they're making a lot of money, or like Instagram people or whatever, but I haven't met somebody who's consistently making a lot of money that doesn't use a lower risk to reward, higher win rate, because it's scalable, it's easier on your mind, it's easier to manage multiple accounts. It's just all around, in my opinion, it's better. But if you want to min-max it, you can just use this as a bias tool and try to, you know, maybe get an entry in here. But again, notice we haven't gone lower than a daily chart. We don't have to do that, right? So stops could have either been at the nearest swing low, which would have been right here, or they could be under the whole range. That's up to you. It's up to your risk profile. You're obviously, again, going to get higher risk to reward, but lower win rate. Sometimes that's really something that I like using. Kind of I am a little subjective there. It depends how far we are to the bottom of the range. If we're very far, then I'll use this right here, because again, I'm waiting for that confirmation that I am correct, of, you know, us pushing really hard in the range. That's my confirmation where I'm confident in that bias. Again, trading is bias, execution. That's it. And then invalidation. Bias is your target, execution is your entry, invalidation is your stop loss. You don't have to overcomplicate it. So let's look at, oh yeah, so last night I went over stocks, and this is just analysis. You know, the crypto guys are like, oh, I don't want to look at stocks. I went over a lot of charts and just marked them green. Look how many charts I marked green. These are charts that I'm just looking at based off of literally just the weekly chart. And let me just tell you my process for what I did. So like, for example, this chart, I looked at it like, okay, the monthly, just at a glance, I'm going to pop back at the monthly. Okay, the monthly is looking pretty crazy. We took out monthly liquidity. Right there, we're most likely going to see some kind of rally, right? On the weekly, what do we have right here? A market structure shift of a short-term high. Now, of course, this is a little bit less value than if we took this high out. And I'm not saying I'm just going to buy calls on every single one of these things on BlackBerry. I'm just saying these are all things that catch my eye. And this is how I'm able to sift through a lot of charts very quickly. This took me maybe 30 minutes last night. And going through this entire watch list that has 300 charts. And this is how I did it. Okay, bam. Okay, what do I see here? Market structure shift, traded into fair value gap, clear draw on liquidity. Okay, next. What's Carvana? Okay, market structure shift, traded into volume imbalance. Okay, draw on liquidity is going to be up. Okay, next. You see how easy that is? I'm not going on every single chart and plotting it out. Now, I will go down lower when I'm trying to decide which chart I want to trade, but I don't have to do that to find good opportunities. All right, Riot, this would also be a fundamental play because it's a Bitcoin stock. Bitcoin mining stock. Clear draw on liquidity. It's bullish. I mean, you know what I mean? It's just, and this is just from a weekly chart. So we'll go over a trade we took using same ideology. AI, I think it went 500% for people who held. I closed it at 380%, which is incredible, especially on options. So this is the same idea. Look, if we go back, we bought it down in this area right here, right, and I think it was the bottom of this. It was like on the 22nd is when I bought it, so it was like right there. So again, it was just weekly. We had a clear draw on liquidity. Look at the range, right? Weekly bearish range, market structure shift. This gives us bullish bias. Price trades back down into a breaker and a fair value gap. I mean, it's like, bro, you look for calls at 30 bucks. How long is it going to take? Well, it's probably, you want to have at least 2 to 3 months on a weekly chart TA, in my opinion. Maybe longer, but and this was something that took me maybe 5 minutes of fucking analysis. A 380% return, which would be like 3.8 to 1, because you're risking 1% of your port roughly on each contract in case it expires worthless. But it's the point of this lesson is not necessarily going to be some in-depth crazy analysis thing, because most of the concepts we're going over I've already taught you, or you've already learned somewhere else. But it's just to show you how simple things can be and how easily you can make a good amount of money on the side, not just being a chart zombie. So take it how you wish, and some people may not use this, you may, but it can help you a lot with bias too if you're not going to use it. So let me look at the chat. Carvana and Riot right at the lows. Hell yeah. Yeah, see, I like both of those charts a lot. Carvana looks crazy. I mean, it's just like, bro, it took out this massive fucking liquidity pool right here, these relatively equal lows, and you get a shift right here. I mean, low-hanging fruit here is a long ways away on the weekly chart. Now, I'm not saying it's going to hit next week, but I mean, it's not 400 shares. Hell yeah, you're going to come up. How much is this? Oh my fuck. It's a massive fucking move. Jesus Christ. Yeah, it's fucking dirt cheap. And again, if we're looking at it like this, like let's look at the range. I mean, it's not easy. And you can now take this knowledge and go to a 1 hour and use this to get your intraday bias. So if I'm looking at a 1 hour chart and I'm coming into the market and this is at 8 a.m., bro, I'm looking for longs. That's how quickly you can find stuff like that. Full of fib, it goes back to that 50%. Oh yeah. Hell yeah, if it goes to this 50%, fucking 3x. The stock market's the new fucking crypto these days with the way the economy is fucking going wild. I like this order block right here. Like this is just this is like a good old OG style order block. Took liquidity, right resting a fair value gap, probably breaker somewhere here in the daily. Somebody said I need to get into stocks. Yeah, you do. You really do. If there is a pullback in a bullish market and I try to be involved in the market, how can I know the pullback is only a little pullback in the M5, M15 range, or a larger pullback in the H4 or H1, H4 even daily range? Or simply use those time frames. If you're trying to use just M5 or M15 without the 1 hour, the 4 hour, you're going to get burnt. And here's an even better idea. Don't trade counter trend. You don't have to do that. You don't have to trade every single move. You don't. And especially when you're a beginner, I think that mentality hurts a lot of traders because, let's say if you're really good pro trend, but you're not so good counter trend, you're just giving your money back. And the compounding negative effect that has is your trading psychology and how you think, because you start to lose confidence, you start to overthink things, you start to just kind of make all the mistakes most people make, because it's all psychology based. So let's say if you're really good pro trend and maybe you do really good 2 days out of the week and you do really bad 2 days of the week, not only, maybe you didn't lose a lot of money, right? You shouldn't, because risk management. But what you did lose is confidence. And that compounds into much greater problems than really anything does. And yes, Ben Crypto, this is recorded. I'm going to go over this chart on Tuesday, or all these charts on Tuesday. I have a ton. I can't, to be honest, I wish I'd have marked my I know eBay was one of my favorites. I like eBay a lot. eBay, Coinbase as well. Meta is, of course, Meta's just been fucking flying already. I should have, I literally wanted to buy shares at $100. Stupid as fuck, I didn't. It's up like 100%. I think Spotify was another guess. Spotify looks pretty bullish. Disney wasn't one of the favorites. JetBlue is getting to an area where I kind of like it as well. All these, really. I marked them all for a reason. I don't even know what some of. This one was another one. What is this? Rocket companies. I don't know if it's like Rocket Mortgage and shit, and like Rocket Money. that's owned by Intuit, so I don't know. Intuit's on this list as well, but easy, pretty clear draw on liquidity. And again, this is similar to the other ones we had. Look, failure to displace among a low leads me to look for a this high. Right, confirmation of that, market structure shift, market structure. Well, this is just a break of structure. It's continuation. Right, price comes down into a discount, balanced price range, draw on liquidity above. Actually, this is one of my. I'm gonna mark this blue now, so I don't forget. Oh shit, I can't hear you. My bad. Yeah, I just saw that. I don't have my headphones. They're not here. I don't have them right now. Yeah, my bad. I was probably just fucking talking forever. Check cat. Yeah, shit looks like it wants to I was looking at this for some reason, I guess, but I mean, I think that if it were me, I would be fucking definitely out of it under this low for sure. Just because the rest of the market's looking pretty wild, but the monthly impulse is bullish. Let's see if we came into a premium. I mean, or a discount, I'm sorry. I mean, I don't know. I think it could come lower. The month, I mean, it's questionable. But that's why I like it. I would like the short because we have that. We took out that buy side. This is like a clean example of what you should look for in the 1 minute. For anybody wondering, this is like a perfect ICT entry model in the 1 minute. This right here. And the entry would be like in this fair value gap or right where it's at, and targeting down lower. But yeah, I would be out there personally. And if anything, like if I had a runner, it'd be like that monthly breaker right here. Or no, I'm sorry, weekly breaker. This one right there. Yeah, short to longs, yeah. Oh man. Yeah, don't sleep on this class, guys. For real, it's super. So many people I just see, they're just like, I could not fucking imagine having been just trading crypto futures the last year. Holy fuck. I cannot imagine. Like, kudos to you guys for even like pushing through that. You gotta diversify, man. You really need to diversify. And like, whether that's Forex, whether it's a funded account, whether it's options, or whatever it is, you know, you don't want to put all your eggs in one basket. You know, that's why you see me, I signal Forex, I signal, and again, when I'm day trading though, I focus on indices primarily, right? I'm not telling you to day trade Forex, crypto, and stocks at the same time. That's suicide. What I am telling you is to try to diversify, and also it'll make you a better trader. And what it'll really help with, which is the most important part of trading, is bias. If you can trade the high time frames effectively, you can trade the low time frames effectively. You cannot say that the other way around. I need to learn stocks. I've only known crypto. It's this trading is trading. Like, I mean, there are different things. There's like earnings and, you know, options. You have the Greeks, and, you know, there is differences. But as far as this, what we're looking at, it's all the same. Charts are charts. You can read fundamentals through charts. Of course, there's going to be outliers where something happens crazy, like the Ukraine war and the market. Of course, it's going to happen, right? But for the most part, you're not going to have to learn a new type of technical analysis. Some people will say that. Some people might disagree with me, but that's the way I see it. I look at charts all the same. Do I factor in general market performance into your stock analysis? I will sectors. So, like, if I think tech's bullish, like for instance, like how we talked about NASDAQ and why I like this high, same reason we're just talking about displacement right there, lack of displacement. Then if I see this, okay, then I'm probably going to look at tech stocks in a more bullish light. That's the way I would look at it, like that. I'm not a big fundamental macro guy. I'm not going to look at like EPS. And I'm not saying you shouldn't. I'm not like, if you do that successful, more power to you. But it's just, to me, it's not worth my time because I do well enough for what I like without having to do that. But you can look at, you know, earnings per share and all this stuff for like for fundamental, like long-term investing. You should do that. But for like day trading and swing trading and stuff like that, I don't think you necessarily need to. I don't think you necessarily need to for investing either. But if there's a consolidation on the high time frame, will I still day trade it? Yeah, for sure. 100%. Use the 1 hour as your new daily. Now, if I don't have a trade set up, like here's the way I will still trade it if I have a setup. If I don't have a setup, I won't trade. It doesn't matter if we're consolidating or expanding. You know, I can have setups in both of those. I encourage you to try to simplify everything as much as possible. Because this space is just riddled with fucking overthinking because of ICT's marketing techniques. So I was saying, I get like crazy. People will be like, okay, well, if your daily bias is still bullish, but in the Asia session and the CBDR has a projection of a 2 standard deviation of sell side liquidity and it had a bearish move, are you still going to be bullish? I'm like, yeah, because I'm looking at the high time frames. Can I go over the Atom setup? Yeah, sure. Dude, why did we have to type P now? I can't just put P. So this was strictly 4 hour. So I was looking at this. We looked at this a while ago. We tried to trade it once and we got some profits off of it. I think it was back in here. We got like a 10% move and then got stopped at break even. So the idea is still the same. I really like the idea. Looking at the weekly, we have a bearish range, right? Market's shifted over here. We had a weekly fair value gap and a breaker right here. Price tapped into it. Price shifted right there. And now we traded back down into this order block. And I went a little deeper than I'd like, but I still like the setup. Now the 4 hour, the reason I liked it when we entered was it had shifted over here. So we traded into it and we look right here, we had a shift and that gave us this order block, which we traded into, and then we just entered right there. I like the setup a lot. We have, and then again, just looking at equal highs, and then just this kind of as a safeguard in case we don't make it up here. Because I always like, if I see these like clean highs like that, I'll usually take something off there. What platform do I use to trade crypto? You can use, so you can use any, I don't know what country you're in. A lot of people will use, allegedly will use Binance with VPNs and different accounts that they've gotten in whatever manner they've found them. Some people use Bybit, some people use KuCoin. But just proceed with caution with trading crypto. Don't put your life savings in there because we saw what happened with FTX. You can also trade it on Forex brokers. That's how most people do it. Stocks, I use Thinkorswim. Yeah, Thinkorswim for me. I mean, some people like Tasty Trade. Like I think they have more margin or something. I don't know, but no, you don't have to use VPN, bro. No, if you're in US, we're trading stocks. It's illegal. We're not doing no. You know, and again, you shouldn't be doing anything illegal ever, anyways. But you know, you want to make sure that you stocks are fine, bro. Stocks are like it's literally like setting a bank account up. Do they really? Tasty Trades like Apex, like you're talking like Apex, like the same Apex funding firm? It's super weird. That's so sketch. I think there's such a I think that shit's gonna rug, dude. I didn't know they're from Robinhood. I didn't even know that background. I think they're gonna rug, bro. I really do. They're running 80% off gold. They're literally been doing 80% off sales for months. Like, you have no fucking confidence or dignity of your big business. You have no fucking value of yourself or your business. You're desperate as fuck. That shit's pathetic. It's crazy to me that people are still buying. It just shows that, but people, there's always those people that are gonna make, you know, those strategies work, sadly enough. Yeah, it's pathetic, bro. We'll have like another couple minutes of questions and I'll hop off. I didn't even know that, Algo. Thank you for letting me know. I'm gonna look into that because I've actually looked into Apex a little bit because I'm going over some stuff on prop firms later this week in a YouTube video, so you guys will get to see that. TD's goated, bro. Just like their interface, and I mean, like, it's TD Ameritrade. They've been around for some time. You know, it's not like Robinhood come out and just like fucking scam people. I mean, not like literally, not directly scam, but you know. Yeah, Boston is. NFA. Can I go over long-term stocks? Same strategy. Yeah, same strategy. That's exactly what we did. And you can do this on a monthly chart. For long-term stocks, like if you're talking about long-term, like 5-10 years, I think you should probably do some research. First of all, first and foremost, you need to believe in the company, because if you don't believe in the company, you're going to have a very hard time holding it long-term. So that's first and foremost. Now, what that may consist of is maybe it's an industry you know, maybe it's an industry that you are fascinated with or that you believe in. Like for instance, I'm trying to build more long-term investments in solar and wind, because I think that, for obvious reasons, that they will, grow. So I need to spend some time looking into that and looking into some fundamental stuff about, because investing is a little different than trading. Like I said earlier, I don't necessarily need to do fundamental investing when I'm trying to buy options or trade, or, I guess you don't need to do it when you're investing, but if you're talking like really long term, I think you need to believe in the company. You need to understand the company's mission, its purpose, and its efficiency. And you need to understand how to dollar cost average. Probably should be doing it with, some set amount per month or week. And you should also look into dividends and how they pay dividends. All that stuff comes into play. Loving ETH longs on big time frames. Yeah, I think everything is looking pretty good. Let me look at. I hate this. Why would they do that? This is what I still want for ETH. I don't know if we'll get it, honestly. We'll see, because it looks pretty bullish, but I wanted to trade down into this weekly breaker. I guess it. Wait, what the fuck it did? I just haven't even paying attention to ETH, I guess. Or no, I'm sorry. The daily breaker is what I wanted. We might not get that, though. We'll see. Really, if we displace above this high, then I'm like, okay, we're going to 2,000 bucks. Like, if we stay displaced above that high and maintain that structure, I'm going to look for longs in the retrace to target that. If we don't displace here, I think we'll come down here. On that note, guys, I'm going to hop off here. As always, I appreciate you all. I encourage you to get outside, get some sun. If it's sunny where you're at, it's pretty sunny where I'm at. So, yeah, I appreciate you all coming through as always. And we will be live on Tuesday. See you later.